when you get to around here, that's when people start shitting their pants big time, and that's when you see gold and silver and cryptos really taking off. Okay, so starting with Aussie Looney, we had this little squeeze, broke out, and it's now ramming on top of this trend line. Now, it didn't quite hit it. It's bounced off it. I think a few things today or last night has bounced off certain levels, but really doesn't change much at the moment. I saw a few people go, "Oh my god, the market's really reversed, look at this." But like when you're looking at the 15-minute chart, everything looks horrendous. So you need to just pull yourself out of the lower time frames, and like when you look at the daily chart over here, you can see it's moved 100 odd pips, but not much. So in terms of what to do, it's resting on this 21 EMA, so yeah, not much to do really on Aussie. Pretty much everything's had a little pullback, but that's just normal. We've had like a week or so of just constant rising, and again, when we're looking at Aussie yen, I mean, there is a trend line like so, and also another one, something like that. Depends which one the market adheres to, but as you can see there, yeah, this is just normal. And I guess if you were to plot an 8 EMA on the daily chart, you'll see that it's just broken through a bit. Okay, let's just get rid of that. So nothing to really do as yet. We just need to wait somewhat. Aussie Kiwi, however, just doesn't give a shit. It tried to pull back. It looks like it's posting a low test, and it's still too early. I'm not saying that this is going to continue going, because it is smashing into it's on that 5-0 level. There's no real clear resistance until this 10600, but that is just, yeah. Whenever you see that many blue bars or red bars in a row, there's a reversal coming. And Aussie dollar, same thing. It's just resting. I mean, we had this sort of pincer movement here. I call it a pincer movement. Technically, it's a rising compression in a falling market, but it looks like a little pincer. It broke out, but it didn't last. It then just did its own thing. So we did get that breakout, which is what we were expecting. But yeah, when you draw just simple trend lines, it's the same thing. They're all sort of just pulling back to the normality, I guess. Australian stock market will look pretty much identical to every other stock market. Bitcoin on FXCM, again, it gives a slightly different picture than TradingView. So if we get TradingView up, this is what Bitcoin looks like on TradingView. Again, I said this is very bearish. Now, is it going to stay below this and be an actual breakout? I don't know. Looking at the 4-hour chart on here, we're looking like some sort of really shitty bearish rectangle, but it's too early to tell. And again, when we're looking at the FXCM chart, you get the same picture. It's just slightly different. Yeah. So we'll see. It's a bit too early to tell. And this is just showing that Bitcoin is very correlated with stocks. Stocks fell, Bitcoin fell. Stocks are having a bit of a pullback today. Bitcoin's having a bit of a pullback. Like at the moment, there is just no inverse. I mean, like Bitcoin's supposed to be an uncorrelated hedge against everything, but at the moment, it's just categorically, empirically proving that it's not the case. And that's because there's quite a lot of derivatives in the Bitcoin world at the moment, and all the big Bitcoin holders are miners and institutional funds, all of which are the institutional players are just liquidating their CFX, cryptocurrencies, because they need to cover their losses on the equity markets, etc. So, yeah, looking at the 4-hour chart, it's a bit clearer. You can see that there's a definite sort of level here where it's reacted from. It's punched through, it's kissed it off, and it's now maybe starting to make its way down, but we don't know. If stocks keep on falling, then yeah, Bitcoin's probably going to fall with it. Same with here yesterday, so this is interesting. So we had the breakout of this sort of bottoming pattern, breakout, pull back to kiss it off, and it looked like it was about to jump up from here, but it hasn't. It's actually just fallen through. So we've seen this across the board. There's been sort of a fake out of some sort. Again with the Looney, Looney yen, same sort of thing. I guess if you're really looking for patterns, you can say that there's a bit of a compression going on here, like so, and we could just see a bounce up from this level here before we then, you know, see further falling down. But yeah, this is, I guess, a rising compression in a falling market. This is a bearish signal. So, well, to be more specific, it's a continuation signal. So yeah, again, Swissy yen is just a bag of balls. Just look at it. Just look how messy that is. It's ridiculous. Not interested in the Chinese stock market. All the ESPN, the Spanish stock market. Again, it's the same thing. What I found yesterday is that some stock markets seem to be lagging. Now, I'm not saying there is a correlation here. Correlation doesn't equal causation, but as you can see here with, let's say, the French one and the Spanish one, they're both formed what looks like the beginning of a live cat jump. Instead of a dead cat bounce on the way down, this is a live cat jump going up, and it's resting on that neckline there. Now, typically with that sort of movement, you should see, I mean, if there's probably 400 odd points here, you should see 400 points to the upside from the neckline, which, you know, is this gap. And when you compare that to, say, the S&P 500, you'll see that it had that little neckline. See, that's what the French and Spanish stock market looks like, and that's what the UK and the US ones look like. It has done its follow through, whereas the Spanish and the French haven't. So what I'm not saying is that, oh, because the US has already pumped through, this is gonna do that as well. If anything, looking at this on the daily or the 4-hour chart, this looks incredibly bearish. Like, I've made a lot of money over the years just trading that single pattern, that rising compression in a heavy falling market. And right now we're very close to a breakout. So the fact that it has actually followed through, maybe, yeah, it's quite bearish. Ether will just look the same as Bitcoin, same bollocks. Euro, Aussie. So Euro has been on a tear, or downwards. Again, if you're doing the 8 EMA bounce and trail, that would have been really nice. As you can see, it's been beautiful. Nice TJ setup here. But again, I guess if you're looking here, you've got a tiny double bottom here. It's broken up from the bum line, so to speak. But I mean, that's really, it's quite insignificant, really, that one. But yeah, I think today is more of a jerky day. It's not really showing us anything. I think it's, if anything, it's just showing that the market just needs to pull back a bit, because it's been going in one direction solidly, so I haven't really seen too many like low risk, high probability outcome setups. Euro Swiss is just is chop central, so yeah, no joy there. Euro pound is just ridiculous as well. Again, it's resting on a big old trend line there. But again, there's nothing, unless you really want to take a bit of a punt, there's no proper trade, no setups here. Again, daily chart, Euro yen is falling. I guess we have like a really weird head and shoulders, but I'm not the biggest fan of this setup. But you can see that it broke through from this trend line, it kissed it off, and it's now going down. I think it's fair to say that we'll see at least falling back down to sort of these lows, but it's messy. It's proper messy. No joy. Same thing over here. I actually had a little play with this yesterday, got bombed out, but yeah. Euro dollar, again, it just looks like an ECG. It's like flatline, and way. And we've got a bit of a compression, as you can see. It depends what neckline you're looking at, but it's something like this. You can see it broke out, well, it sort of like dribbled out, and it still hasn't really made its mind up what it's going to do. Is it going to just continue bouncing up this trend line, or is it literally going to drop? Again, it's a symmetrical setup, so we really don't know. Pound Aussie, yeah, it's just making its way up. It's just slow and steady. Pound Aussie, it's just, for a long time it's been going up, since 2016 basically. So yeah, we've got two key trend lines here, but yeah, this is probably the world's most unhelpful, unactionable update, because there's just not much happening. There's not much happening. I think everything's on tenterhooks at the moment. Everything is doing what the stock market is doing. I mean, look at this picture. This looks pretty similar to what stocks are doing. Just look at, in fact, just go back to Aussie yen. Yep, same sort of picture. That's exactly what this S&P 500 looks like, pretty much. Let's look at pound dollar. Same thing. German stock market, same thing. Again, looks like a big day on the German stock market, but is this just a simple pullback? For example, on the 4-hour chart, you can probably draw this a lot more accurately. It's going to be something like this, and guess what? It's literally just resting on this line here. And again, when you're looking at more of the major stock markets, we've got a bit of a pincer movement as well. So I think it's a bit early to break out, but what we could see is movement to the upside a bit more. Probably take out this high before rolling over, because this is definitely a pretty bearish signal. The thing is, technical analysis sort of goes out the window when massive fundamental analysis, fundamentals are playing, i.e. the Fed just backstopping everyone. For example, the Fed is buying up everything. They're buying stocks through proxies. They're buying up junk bonds, and all the big debt bubbles are in the junk bond realm. For example, and also it's not just that. I posted, came across so BlackRock are literally just copying the Fed. Whatever the Fed buys, they're going to buy, and this is the biggest fund on the planet. Yeah. So this is why I said technical analysis can sort of go out the window sometimes, because if the Fed is backstopping everything and everyone, which is what tends to happen during times like this, the markets go wild. In fact, as into the upside. So what we could actually be seeing is like the beginning of a massive bull run, and this is simply a double bottom. And then, yeah, it could pump north. But mind you, this is just, yeah, it's just a bit shit, really. Yeah. TA says this is going to pump to the downside pretty sooner than later. I mean, it may make a run for 11,000, but yeah. The NAS is just literally, it's trying its best to get back all of its losses. So from here to here, it's gone. Yeah, it's touching about a 70% retrace. It's just insane. The S&P 500, that's about 50% the last time I looked. Let's have a look up here to down here. Yeah, hovering that around the 50% level. But yeah, gas should be falling. Gas has no life. Like as the world transitions to solar and battery, like oil and gas are doomed. So yeah, and I'm talking long term here. I'm like over the next 10 years, like they are going to be in the gutter. Mess, not interested. I mean, there is on the 4-hour chart, you get slightly better definition, but you can see that there's some sort of compression, maybe a break to the downside. I mean, this is a bearish pattern, but it's just so messy, and you really don't want to be shorting it at the end of that massive overextended downwards candle. So just sit back. Here we had another one. I said it would pump down. It did break out, but again we had that weird move up. Yeah, same thing. Not too interesting. I mean, this trend line, however, was interesting. It looks like it's just bounced off. If we draw it slightly like this, it just bounced off like so. But I mean, this could just be another sort of like I said with stocks, a bit of a pincer movement, and we're literally going to go and start bouncing north towards the back end of today, or tomorrow. FTSE, same shizzle. Not much is happening. Yeah. So I'm nursing a few longs at the moment. One second. Okay, resume recording. So Euro Swissy is the inverse of Euro Dollar. So same weirdness. Again, I'm just not interested in much. Yeah, there's just no real setups at the moment. There's no clear movement. What's happening here on dollar? Yeah, and again, big old. No. I mean, that could be the start of a big old dead cat bounce, and we could see it pump down to 105. But it's literally just bounced off that level. So the 10700. No. Nothing. Let's have a look at some trading porn, i.e. the exotics. Nope. No. Dollar, Swedish krona. No. And then finally oil. Yeah, oil. We're going to see oil at $10. We have to. Just there isn't a question in my mind that at least over the next 5 years, we'll see $10 oil. Like, it's screwed, especially now the world economy is just frozen, and oil is literally the lifeline of the world, or it's the blood that courses through its veins. Like, there's just not as much going through, so demand will have to, we'll see $10 oil, no problem, especially when solar really kicks off. And then gold, I mean, on the 4-hour chart, this just looks like lovely trading, especially for the 8 EMA bounce and trail, if you did that strategy. Again, trading gold on FXM is a bit shit, because it requires so much margin. Like, if you wanted to go £1 a point, you need $9,000 in margin. It's just nuts, because it's so highly geared. I mean, look, this little bar here is just, over 1,000 pips. So it's crazy. But I see gold doing ridiculous things north side once we start having proper capitulation in the markets. At the moment we haven't. Like, you speak to every random person on the street, like, even there's some people who I used to consider as, informed, and some of these people go, oh yeah, no, it's just this little blip in the markets, we'll soon see all-time highs again and everything's going to go back to normal. I'm like, Jesus, Elon Musk, like, does this, like, it's surprising how poorly informed some people are when it comes to what's happening right now. Like, literally the world is on its knees. Unemployment all over the world is going through the roof. We've got the best part of 2 billion people under lockdown. Jobs and businesses are dying, and there's a rough rule of thumb that for every 3 days a country drops tools, it reduces GDP by 1%. So and there's I saw some analysts saying that Q2 of 2020 is going to be worse than all of 2008. In terms of performance, and it's probably not that far off. So I think, this is just a sucker's rally. I think, it is that relief rally that I have been talking about, but the thing that's I guess heavy on my mind at the moment is that everything is pointing to the downside. We need to retest the lows. We need to, we're going to see further falling. However, we're in a completely new world. Like, the Fed has never tried to be a guaranteed stop loss for as many different things as it's saying that it's going to do right now. Like, we're going to see massive runaway inflation at some point. Like, you cannot do all of this stimulus and not build up, like, So at the moment, all of that stimulus is not hitting the economy. It's not hitting small businesses. It's not hitting the people. It's being absorbed by the banks and mainly the financial sector, really. So you're not getting economic productivity, and you're not getting currency velocity. So it's not changing hands. And so this is why I think a lot of the measures won't touch the sides, because they can print $1 trillion, but if it's not getting to the people, it's not gonna do anything. And even if it does, even if they do helicopter cash, what are the public going to do? Everyone has been screwed over because no one, it seems, has saved 3 months worth of savings for a rainy day. Like, now is when we need that rainy day fund. So if we do start getting massive tax rebates and cash, hell, just cash in the bank, people are not going to be spending it. They're not going to go traveling, around the world like they previously would have. Hell, like, touch wood. Oh shit, there's no wood here, but I'm not financially, barren, or I can't think of the word. I'm not like hard up, but we had a whole bunch of holidays abroad this year, and we've just cancelled them. Not because we can't afford it. It's because there's just too much economic uncertainty. What we personally don't want is to go on holiday and then come back and then not be allowed in without some sort of weird, I don't know, certificate of movement or whatever. It's that uncertainty. So again, buying travel stocks is just bonkers. And yeah, I will make another video just for the crash at some point, because I want to go through things more in depth. But yeah, so where does that leave me right now? It leaves me in I've traded this relief rally pretty poorly. So yeah, I'm just waiting. I've got a little long here. Yeah, so this is no man's land for me at the moment. So I think if I was to take a bet, which I guess I am, I'd say that today is just a down day. It's just a pullback day, and we're just pulling back. We could even pull back down to 23,000. And I think we're probably going to continue rallying for the moment, because all of that, Fed stimulus isn't really shown in the markets yet. So, yeah, I wouldn't be surprised to see a move back up to 25,000. So, yeah, I think that's it for today. Again, looking at trading. Oh, we've already got it open. I had a look at Tesla the other day, and Tesla's really bounced back, but I think this is, again, foolish to think it's going back to all-time highs. I think once the stock market properly capitulates, and we haven't had proper capitulation yet, people think, oh my god, this is really, really bad. Nope. Let's get to a clearer chart. When you, proper capitulation is when we see this move. Okay, capitulation is where you get to somewhere around here. Oh my god, no, wrong one. When you get to around here, that's when people start shitting their pants big time, and that's when you see gold and silver and cryptos really taking off. But at the moment, people are, thumb and bum, mind in neutral, they're happy. It's very similar. If we go back to 2008, I don't know if you can remember, this rally here really suckered everyone in. Everyone's like, it's fine, there's nothing to worry about, nice triple bottom or whatever. Inverse head and shoulders, we're going back up. It had a 50% retrace, and then it just went, see ya. And this is where we saw the panic. So we just haven't seen the real panic yet. No one has capitulated. So I guess we'll start seeing this when all the Fed stim doesn't work, and then they go nuts and start. There'll probably be a day where they print $10 trillion and it does bugger all. So yeah. Anyway, enough for today. Hope that makes sense. Yeah. Toodles.